All right, listen. Silver is setting up for a classic Friday decision day. As I'm recording this, silver is around 83.11 an ounce, down about 1.25% over the last 24 hours. Gold is around 50.6690, down about a third of a percent. That matters because it tells you silver is still the risk-on, risk-off metal right now. When traders get nervous, silver takes the punch first and harder. So the question for Friday is simple. Are we about to get a clean rebound, or are we setting up for a second leg down that catches people off guard? And I'm going to walk you through exactly how I'm thinking about it. Without hype, without predictions dressed up as certainty, just the framework I use when the market is sitting right on the edge. This goes deeper than what you're seeing on the surface. Here are the three factors that converged right now to make Friday especially dangerous. First, silver is still moving like a positioning market, not a slow investing market. What I mean is, a lot of the move is being driven by traders and leverage, not just long-term buyers quietly accumulating. Silver is notorious for that. It's thinner than gold, it whips harder, and once stops start getting hit, the move can feed itself. So if we get even a small push down early Friday, something that feels like just another red morning, that's where you can suddenly see a cascade, not because the world ended overnight, but because too many people are on the same side of the boat. Second, the level behavior right here is everything. Silver's day range is roughly 81.49 to 85.10. That tells you we're in the middle of a volatility pocket where both sides are getting tested. And when a market chops like this into the end of the week, Friday becomes the closing decision. Because traders do one thing on Fridays that they don't do the same way on Tuesdays. They reduce weekend risk. They trim leverage. They tighten stops. They take profit faster. So you can get these exaggerated moves, either a snapback rally because shorts don't want to hold risk into the weekend, or a dump because longs get impatient and hit the eject button before the close. Third, silver's psychology right now is split in half. Half the market is saying, buy the dip, industrial demand, long-term story, the squeeze narrative, all of it. The other half is saying, rates, dollar, macro risk, silver's going to get smoked in any risk-off pulse. When you have that kind of split, you don't usually get a polite, orderly Friday. You get a move that feels unfair. Now let me build the evidence in the exact order I'm watching it, because this is what will keep you from getting emotionally whipsawed. Institutional money saw this coming. Not because they know the future, but because institutions react to the same thing every time. Liquidity and leverage. Friday is about liquidity. If liquidity is good and buyers step in, silver can rebound fast because it's built that kind of market. It doesn't need a long runway. It just needs one strong wave of buying and a bunch of shorts realizing they're leaning too hard. And when that happens, the rebound doesn't look gentle. It looks like silver teleported higher. But if liquidity is thin and the selling starts hitting into a quiet tape, that's when silver doesn't just drift lower. It drops in chunks. And here's a key tell you can use even without watching a chart. Ask yourself, does silver feel like it's struggling to go up even when the pressure is off? If it can't lift when the selling pauses, that's weakness. But if it snaps higher the moment the selling pauses, that's strength. Now the technical side, again, no charts needed. I'm watching this like a two-scenario decision tree. Scenario A is the rebound. For a rebound to be real, silver needs to do two things on Friday. It needs to stop making lower lows early in the day, and it needs to reclaim the mid-range quickly. In plain English, if silver dips and then buyers immediately push it back up and keep it there into the afternoon, that tells you the market found real demand. That's usually the signature of a shakeout. Weak hands get flushed, strong hands absorb the supply, and you get a rebound that continues into the next week. Scenario B is the second leg down. This is the one that hurts, because it starts with false hope. It looks like silver is stabilizing, and then it breaks again when the day gets later. If silver spends Friday failing to bounce, just kind of limping upward and then slipping again, that's when you should respect the possibility that the market is setting up to break down into the weekend. Because the weekend gap risk is real in metals. Not because metals trade like meme stocks, but because headlines don't stop just because the New York close hits. Now the fundamental layer, this is where people get trapped because they mix long-term bullish with short-term can't drop. Silver can absolutely be a long-term story and still drop hard in the short run. Silver has two personalities. Gold is mostly monetary. It's a reserve asset. It's the trust metal. Silver is monetary and industrial. That's why it moves harder. When the market feels optimistic about growth and demand, silver gets treated like a high beta version of gold. But when the market gets defensive, silver can trade like an industrial metal first. So Friday is really a battle over which personality is in charge. Is silver trading like money or like a growth-sensitive metal that gets hit when conditions tighten? Now let's talk history, because this playbook has run before. Think about 2011. Silver didn't move in a straight line. It had these violent spikes and violent collapses that made people feel like they were losing their minds. And what happened in that cycle is what still happens now. Silver rallies and pulls in new buyers. Then it drops fast and it forces the question, were you here for the thesis or were you here for the move? That distinction is everything, because traders who are there for the move will sell the moment the move turns against them. People who are there for the thesis will still feel pain, but they won't be forced out the same way, because they're not using the same leverage and they're not relying on being right by Friday at 4 p.m. That's why silver gets these air pockets. It's not just supply and demand, it's forced behavior. Now let's make this personal. Here's what this means for your portfolio. If silver is around $83 and it swings 3% on Friday, which is not crazy for silver, that's roughly a $250 move. If you own 100 ounces, that's about $250 in a day. If you own 1,000 ounces, that's about $2,500. And if you're in something leveraged or you're using options, the emotional pressure is even worse, because the clock is part of the trade. So what do you do with that? You stop thinking in terms of, I need to be right today. And you start thinking in terms of, what is the market signaling? Here's the signal I'm watching for Friday. If silver sells off early and then powerfully reclaims the range and holds into the close, that's a strong tell the selling was mostly a flush. But if silver can't reclaim and it keeps fading late day, that's a tell that the market is still distributing, meaning sellers are still in control. That doesn't mean it can't bounce next week. It means Friday didn't finish the job. And in markets like this, unfinished selling pressure tends to come back. Look, the question isn't whether silver will be volatile on Friday. It will. The real question is whether Friday is a turning point or a trap. Right now, silver sits around 83.11. Gold is around 50.66.90, and it's not dropping nearly as hard. That divergence matters because it tells you the pressure is silver specific, either leveraged selling, industrial sensitivity, or positioning. So I'm treating Friday like a decision day, not a day to make emotional bets, a day to watch how the market reacts to stress. This is educational content, not financial advice. Do your own research, consult licensed financial advisors before making investment decisions. These are market observations and analytical frameworks, not buy or sell recommendations. But the pattern tells the story. All right, before you go, 3 quick things. 1. Drop a comment. Where are you watching from? And what's your Friday call? Does silver close the week higher from here, or do we get that second leg down? 2. If you're not subscribed, hit that button now. I'm putting out unfiltered analysis consistently. And listen, I'm fighting copycat channels stealing this content. If this video provided value, comment "Truth wins" so the algorithm knows you're here for the original. 3. Next video drops soon, and I'm covering the one thing that decides whether a silver bounce is real or just a dead cat bounce that sucks people in before the next drop. Last time this happened, it surprised almost everyone. You won't want to miss it. See you in the next one.